we have seen conversion method, conversion of single entry into double entry. For that purpose, we prepared opening statement of affairs to know the amount of opening capital. Opening capital, then cash book to know the closing cash in hand. To know the closing cash in hand, then debtors account to know the credit sale, creditors account to know the credit purchase, to know the credit purchase. Okay, then we prepared trading account, so it is to find out the gross profit. So up to gross profit it is over. So we will continue the same problem, then we can start the next chapter. Up to gross profit it is over. By gross profit, so we know that. So for preparing trading profit and loss account, we have to look at cash account. If it is payment side, expenses will get, from income side, income we will get, related to profit and loss account. That only you have to write. So 95,000 gross profit, 95,000. Okay, now you have to look at any expenses in the payment side. That also, adjustment also you have to look at, related to profit and loss account. You look that pay to creditor, that is related to creditor only. Business expenses, cash book payment side, yes, that it will come debit side. Business expenses, to business expenses, 12,000. Okay, expenses debit. Next, cash book payment side, wage paid already wrote, drawings, that capital account, closing cash in hand, that closing balance sheet only. Then debit side, further capital, that is with the capital only, received from debtor, already we wrote in the debtors account. Over. Clear? Now, if any interest received, commission received, then we have to write in the credit side. Okay? Now you have to look at adjustment. All sale and purchase were on credit, that already we wrote, purchase and sale. Provide depreciation on plant and building by plant and building by 10%. Okay, so debit side you have to write to depreciation on, same like last, depreciation on plant. So we know that it is calculated on the base of closing balance. Closing balance 1 lakh into 10%, 10,000. Next, to depreciation on land and building. So it is calculated on the base of closing amount, land and building closing amount 2,50,000 into 10 by 100, 25,000. Okay, so depreciation on plant, building and machinery by 5%. So to depreciation on machinery, it is 5%. So machinery closing amount 50,000. 50,000, 5%. 2,500. Next, make a provision for bad debt at 5%. That means new provision. So no bad debt. New provision for doubtful debt. Directly we can write. New provision for doubtful debt. So here no further bad debt. If it is further bad debt, first you have to write to further bad debt. bad debt further bad debt to add new provision. Further bad debt it is not there, so add new provision 5%. It is calculated on the basis of closing. On the basis of closing. Only interest on capital is calculated on the basis of opening capital. Okay, so otherwise they have to give some adjustment, then only 5%. So 4,250. 8,500. Okay, now so now any adjustment? No, over. So profit and loss account is over. Credit side is more. $95,000 to net profit transfer to capital. To net profit transfer to capital. Balance
$41,250.
41,250. $41,250. Now balance sheet. So profit and loss account it is over. Now balance sheet. Balance sheet. Balance sheet as on it is 31st December 2013 on the base of your book. It is 15 within you have to write. Then what you have to do? So whenever we prepare opening balance sheet also, closing balance sheet also, first we have to write cash in hand, otherwise we will forget. So which amount, from where we will get closing cash in hand? You have to look at cash book closing. So normally third chapter we studied, third fourth chapter cash book. So we are preparing closing cash in hand. So it is given 7,000. Clear? Opening balance sheet we wrote 12,000 cash in hand, here 7,000. Then what do you have to look? All the closing information. Closing information, if any adjustment is there, that you have to adjust, that only. Clear? Closing assets and liability is given, so if any adjustment is there, you have to adjust. You look at debtors, adjustment is there, new provision, closing 85,000 less new provision for doubtful debt. So already we wrote in the debit side 4,250. So 80,750. Next one, creditor. Creditors, no adjustment. Creditors, no adjustment. Closing amount you have to write. Closing amount is 29,000. 29,000 closing. Next, stock. No adjustment. Closing amount 70,000. Now, plant. Adjustment is there. Depreciation. Plant 1 lakh less depreciation 10,000. 90,000. Next, machinery. Machinery, and also depreciation is there. 50,000 less depreciation. Less depreciation 2,500. 47,500. Next, land and building. Yes, depreciation is there. Land and building 2,50,000 less depreciation 25,000. So 2,25,000. Next, investment. Closing, no adjustment 20,000. Investment 20,000. Investment 20,000. Adjustment everything we wrote. Depreciation, provision for doubtful debt, everything we wrote. Now here, opening capital. Here only opening capital will be used. Already we prepared opening statement of affairs. Opening capital. Opening capital. Karthik. Opening balance sheet balance.
Five lakh.
5 lakh. Okay. 5 lakh. Opening capital, it is given 5 lakh. Here you have to look in receipt side any further capital. Yes. So our capital will increase. Further capital. It is given in the cash book 20,000. 5 lakh 20,000. Then add net profit. Add net profit. So we already calculated net profit 41,250. 41,250. Five lakh 61,250. Then you have to look in the payment side. In the payment side, any drawings. Any drawings. Yes, 15,000 less drawings. Less drawings. 15,000. So 51, no? 46. 5 lakh. Then any other? 5 lakh 46,250. Okay, only drawings is there. Okay, remaining order. Okay, whenever you write capital, opening capital, add further capital. If it is further capital, our capital amount will increase. Again they invested. Then add net profit less drawings. Over. Total
5,75,250.
5,75,250. Okay. 5,75,250.
Sir,
Tell.
in asset side, 135,000 difference is there.
35,000.
Sir, in cash book payment side,
Yes.
bank balance.
You look at that in the cash book, 35,000 is difference because we here closing amount, bank also given, cash also given. I saw only the cash in hand. Balance at bank means cash at bank. Okay, cash at bank also there, cash in hand also there. Okay, 35,000. Cash at bank, balance at bank it is given 35,000, then cash in hand 7,000. Okay, so you have to look at closing. If it is only by balance CD means we know that only cash in hand. If it is separately balance at bank also given, cash in hand also given, means closing bank amount, closing cash amount. Okay, so we completed a single entry. So one thing you have to remember, this converting the single entry into double entry, it will not come in the exam. Okay, so it will use, but it will not come. Converting single entry into double entry, but up to bills payable, debtors account, creditors account, bills receivable, bills payable, that you have to study this. So if you want, I will give one extra problem. Okay, in your group answer also I will give, so you have to work out. Okay, for exam point of view, no need to study. Shubham Pal. Okay, so this chapter, first we studied what do you mean by single entry, an accounting system which is not based on double entry. It is incomplete, or single entry system. It is incomplete. You look at it, because it is incomplete, inaccurate. Because whenever we are converting the single entry into double entry, so why we are preparing opening statement of affairs? To know the opening capital. Suppose if any item left also, we will get the capital. Okay, so it is inaccurate, unscientific. Features maintenance of personal account only. Now you understood the meaning. We are preparing debtors account, creditors account, bills payable, bills receivable, related to persons, maintenance of cash book, to know the cash in hand, dependence on original vouchers. On the basis of original bill, we are recording the transaction. Suitability, it is suitable for sole trader, then which one, partnership firm. Preparation of final account. Okay, so we can prepare the final account from incomplete records. So limitation, we can't prepare the trial balance. We can prepare trading and profit loss account, we can prepare a balance sheet. Okay, that is the limitation. So 1 mark if they ask, you can write. Then ascertainment of profit and loss. How to ascertain the profit and loss? Two methods is there: statement of affairs method and conversion method. Statement of affairs method and conversion method. Statement of affairs method. How to calculate profit by comparing the closing capital and the opening capital. Okay, so it cannot be called balance sheet because it is not an extract of ledger account. Okay, so you look at the format of closing capital, add drawings made during the year less additional capital. 8 mark question. 8 mark question. Add drawings made during the year less additional capital introduced, less opening capital, less profit before adjustments. Okay, now you have to less the adjustment related to profit and loss account debited, then the adjustment related to credit side of profit and loss account that you have to add. Then here prepaid insurance, add income received in advance, less, that you have to remember. Then conversion into single entry into double entry. Now we did one problem. Opening balance sheet we prepared, cash book already it is there. So from cash book, opening cash in hand, closing cash in hand, don't forget. But no need to write in the exam, I will not ask. Prepare cash book, yeah, you have to remember. Prepare debtors account, creditors account, bills receivable, bills payable account. Last you have to prepare trading profit and loss account and balance sheet. Okay, I think compared to last chapter, it is very easy. Is it correct, Adul?
Yes, sir.
Okay, next. Okay, next one, bank reconciliation statement. Bank reconciliation statement. So if there is any quarrel between Shubham Pal and Sharath, so in that case, Karthik, what you will do? Quarrel, action.
I'll try to stop it.
Okay, so that only bank reconciliation statement. So if there here means problem not with Shubham Pal and Sharath. Here means cash book. We know that we are preparing one double column cash book. Bank transactions we are recording. Okay, that is we are preparing cash book. Bank transaction we are preparing. Banks are preparing our, which one? Which book they are? The entry they are recording, our entries are recording in passbook. If there is any quarrel, if there is any difference between cash book and passbook, there only bank reconciliation statement will come. That time he will come, Superman, bank reconciliation statement. Okay, so you know that. So every transactions, every business have to open a current account with the bank. Okay, if it is a business organization, they have to open a current account because majority of the transactions are doing through current account only. Clear? So what we will do, if you are making any transaction, first we will put in our book. Our book means our cash book. Whenever we are depositing amount, we are withdrawing amount from the bank. So we will put in our account, that is cash book. Same way, so you look that if you are debiting to cash 40,000, deposited a cash into bank account to cash. Whatever we are debiting, that what they will do, bank they will credit. Bank they will credit. Entries, if we are recording on the debit side on the cash book, that they will bank will credit in their account. Opposite, what we are debiting, they will credit. What we are crediting, they will debit. According to that only the transactions are entered in the passbook. Okay, so a bank credit balance means we have more amount. Bank account credit balance means we have more amount. Then bank account debit balance means we have less amount, minus amount, debit. So they debited, which one? They paid electricity bill. So they debited means our amount will decrease. That you have to understand, bank point of view. Okay, bank creditor means our amount will increase. Suppose if we deposit, then they will credit in our account. Credit, so our amount will increase. Debited, so if any message it is given, it is coming in the which one mobile, bank credited with rupees 45,000 means our amount will increase, that much amount will increase. Debited with means sometimes they are charging the service charges, commission. Okay, so that is that you have to remember. Okay, so here who are preparing the cash book? The bank, business people. Business organizations are preparing cash book. Already you know. Shubham, already we know that cash book, double column cash book, contra entry. Okay, so here cash book is prepared by the businessman, passbook is prepared by the bank. So whatever we are debiting in the cash book, that they will credit. Whatever we are crediting, so you look at that, whatever receipts, deposit, that will come in the cash book debit side. Whatever payment we are making, that will come in the credit side. So here means how passbook opposite. So whatever debiting, they will credit. They will credit in their account because it is prepared by the bank. Bank point of view, that is deposit, credit, debit, withdrawal. But here means what? Here receipts, deposits, receipts. Here means withdrawals or payments or withdrawals. Okay, so after some times they will, with one bank will issue the copy of information, copy of the transactions made in the particular month. Then that information and our cash book we have to compare. If any difference is there, if any difference is not there, no need to prepare bank reconciliation statement. It is prepared by the depositor, businessman only, accountant. Okay, if you ask to any accountant, those who are working in any organizations, they have to prepare. If there is any difference between balance shown by the cash book and the bank passbook, in that case, they have to prepare bank reconciliation statement. Okay, so if there is any clash between the cash at bank, business cash book and the passbook, then we have to open which one? Bank reconciliation statement. Okay, bank reconciliation statement, cash book balance 1,500, bank statement balance 1,760, difference is there 260, open bank reconciliation statement. Clear? Okay, if there is a difference, if there is no difference means no need to open, it is correct. Okay, sometimes we will which one forget to record some transaction. Sometimes the bank will record, bank will debit the service charges, but the businessman will not get the information from the bank, so they won't record in the cash book. So then there will be a difference between the cash book and the passbook. So in that case, we will open bank reconciliation statement. Shubham, clear? Atul?
Yes, sir.
Okay, so cash book is prepared by the businessman, double column cash book. Passbook is prepared by the bank. So after every month, so on the basis of banks, they will pass the copy of the transaction to the business people. So then they will look at their cash book. Then if there is any difference, then they will prepare, the accountant will prepare bank reconciliation statement. So it will use practically it is used. Bank reconciliation statement. Okay. So what do you mean by bank reconciliation statement? This one. It is a statement prepared by the depositor. Business people. For the purpose of reconciling or making, settling or making agree the cash book balance with the passbook balance on a certain date by making suitable adjustments. Otherwise, it is prepared to bring the cash book balance, in agree with the passbook balance. It is prepared to bring the cash book balance in agree with the passbook balance. That is bank reconciliation statement. It is prepared by the depositor. So normally question will ask, it is prepared by who? Not bank. Prepared by the business depositor. Okay? A representative, the business people, accountant, for the purpose of reconciling, settling or making agree the cash book balance with the passbook balance on a certain date by making a suitable adjustments. Otherwise, simple meaning, it is mainly prepared to reconcile the differences between cash book and bank passbook. Otherwise, it is prepared to bring the cash book balance in agree with the passbook balance. That is bank reconciliation statement. To bring the cash book balance in agree with the passbook balance.